In the current economic climate, there is a significant trust deficit between the government and the public regarding policy reversals and some policies like the Windfall Tax, which of course we've been told by the National Assembly parlance is a windfall levy. What should be done to bridge this trust gap and ensure that policies are transparent, fair, and consistently applied? How can we establish long-term guardrails to prevent policy reversals and build trust among economic agents?
Let's even look at what is a trust deficit. Let's start from the academic definition of trust deficit. It's basically when commitments are not aligned with the outcome or commitments are not abided with. When government make commitments or make statements and then the outcome or the actions of the government do not align perfectly with the promises they've made. That's why you talk of trust deficit, because basically people are saying, look, what you have promised us, you are not able to keep. So let's look at why do we have this trust deficit? And we're going to just, because if you want to go back to the issue of trust deficit around the country, about this country, you're going to go back to the beginning of from the point of independence. But let's dwell on the current government where we can change things, because you can't change anything about the past. In the first place, the government came about and said, look, we are no longer going to borrow by ways and means. The government made that as a commitment and said we're not going to borrow by ways and means. So I want to highlight those issues of fraud deficit, and then we'll deal with how do we build the guardrails. And the government, in the first 5 months of the government, by the time the government came into power, the borrowing from the central bank as ways and means was 22 trillion. Then the government 22.7 trillion. The government by December last year went to the National Assembly to securitize another 7.3 trillion, bringing it to 30 trillion. So in effect, within a period of 5 months, the government borrowed 7.3 trillion. If you look at the announcement that was the details of the budget that was made by the Minister of Budget, it showed that at the end of September, 30th of September, federal government borrowing by ways and means was about 3 trillion. So in effect, the next 3 months or 2 months, that is October, November, and December, next 3 months, the government borrowed another 4 trillion. So in effect, that if you had made a judgment on the basis that the government is not going to go into ways and means funding, 7 trillion was borrowed in a period of five months. Fast forward, at the end of last month, end of August, the government had borrowed from the financial system by way of issuance of treasury bills, issuance of federal government bond, federal savings bond. The government has borrowed 21.8 trillion naira. This obviously not in the public space, because you have to add that to the national debt about 121 trillion at the end of March this year. So in effect, the government had made a commitment on its fiscal responsibilities, not keeping to that. Next commitment we have had in the financial space is issue of the government saying we're going to reduce the number of taxes in the system and harmonize the taxes. At the same time, the government is introducing more taxes. So for business leaders, you ask yourself, so what should I believe? And that's why I talk about trust deficit. If I'm allowed, I can go on and on and on, including the issue of subsidy is gone. And several agencies of government say there's no subsidy. And at the same time, we're discussing about $6 billion that had accumulated as debt because of subsidy. So, but back to the issue, how do we build guardrails? We need to go back and make sure that some of our laws are adhered to the letters, and when those laws are breached, there are sanctions. Take, for instance, the issue of Fiscal Responsibility Act. It had made provision the government must borrow maximum of 5% of previous year's government revenue, and they must be paid back within 1 year. That was breached consistently, and that's how accumulated 22 trillion naira in deficit in ways and means funding. There is no sanction ever imposed on anybody. So now the government at the same time that said it's not going to borrow from the ways and means. It's also expanding the limit on ways and means borrowing to 10%. So that's inconsistency. So the key thing we have to look at what's the Fiscal Responsibility Act. Can we make sure that is enforced and government does not breach it? It don't just breach the law and just go on as if nothing has happened. Then we must also make sure that where those breaches are going to ever happen, It goes through a process of amendment of the law. And that law is subject to public opinion, so that people can actually say, exposed to the people, and people can say, look, you shouldn't do this or you should do this. Probably by the time we ensure that policies and laws are abided by those in public service and breaches are sanctioned, we may get to a point where actions of government will align with commitment made by government, and that will narrow the trust deficit we have in the country.
Considering the fiscal implications of Budget 2024 adjustments with the inclusion of the windfall tax, how can the government align this policy with broader economic objectives without stifling economic growth?
One of the things that is missing in terms of our even fiscal policies and effectiveness in terms of economic development is that we seem to be treating fiscal policies in silos. We have what we call medium-term expenditure framework, which is supposed to be a 3-year rolling plan that's supposed to give us a 3-year plan for an economic plan. But unfortunately, it's actually an annual ritual where basically what the government does every year, they do a completely new medium-term expenditure framework. There's actually no rolling in terms of medium-term expenditure framework. So we don't have, as a country, we don't seem to have an overarching economic policy where the fiscal policy fits into the overall economic development policy. And that's, for me, is the starting point in terms of how does this tax fit into that. In the first place, if you take this issue of tax, or whether you call it levy or tax, that is windfall tax or windfall levy. The first question I wanted to ask those, of course, upon there's no public sector person who is here to answer that question is this. In deciding to have a windfall tax, did we also look at what is the impact of that tax on the overall economic development of the country? If you want to look at that, which means you are going to have a bad view of economic policies before you enunciate them, instead of having a total view of the impact of an economic policy. So in a very narrow perspective, so obviously the government is looking at, let's increase our revenue. But they also recognize that at the time when this tax evolved, or this income evolved, this windfall income came to the banks, they also, another segment of the economy that suffered huge losses as a result of moving the exchange rate. Because what has happened that if a bank lends to somebody in dollar, the person will have a liability in dollar, the corporate Nigerian operator will have a liability in dollar, which has to be revalued at the new exchange rate, while at the bank we have an asset in dollar that has to be revalued at the new exchange rate. So if you look at the holistic or consolidated balance sheet of corporate Nigeria, you're going to see that whatever gain that was made in terms of windfall gain has also been offset by losses in terms of windfall exchange losses. So if you sum up the two, you may end up with a zero benefit. So if you impose a tax on those who have gotten reward, and that tax is not passed on as a benefit or to offset the cost that others have incurred in the as a result of this movement in exchange rate, you are going to find out that corporate Nigeria suffers. You are seeing a lot of corporate Nigerian operators that have declared negative shareholder fund. Nestle, for instance, is declared negative shareholder fund. Some of the companies in this country because of the unusual movement we witnessed in the exchange rate. So if government had a holistic view of how do we grow this economy, and not just how do we make money from what we are seeing as revenue, then the government would have said, if we have to impose this tax, then the benefit of the tax would have been passed on to corporate Nigeria that have incurred huge losses. Like I said, if you take a balance sheet of a corporate Nigeria, you're going to end up with a zero, because the banks are holding assets because of loans they granted in dollars. The corporate Nigeria are holding liabilities for the loans they took in dollar, and their liability have gone up while the asset value had gone up. And then you're only looking at that asset and taxing it without thinking of how to deal with the other one. I mean, the liabilities. So in summary, what I'm saying is that for us to have effective use of fiscal policies, including tax policy, which is a component of fiscal policy, we really need to define what's our overall economic development plan. And that also touches on to some of the things my colleagues have said, that we need to use this to support the vulnerable in the society. The vulnerable are those who, obviously, because of moving exchange rate, cannot feed and stuff like that, suffering severe cost of living crisis. There is no component of this tax that's going into them. So in effect, the government is just looking at what's the need for us as a government. And that defeats economic growth, that defeats economic development, because you don't just take revenues from a system and then not look at the implications of that revenue that you've taken to the other aspect of the system. And I think we need to, for a country of our state of development, and I want to emphasize it before I round up. If you look at, and I need to use this word, tax policy is a domestic economic policy. You don't ever copy what happens elsewhere, because economic conditions differ from one jurisdiction to another jurisdiction. Let's take for instance a country like United Arab Emirates. United Arab Emirates, the cost of developing and attracting capital into their country, suspended the charging of value-added tax for years, had a zero tax policy, corporate tax policy for years, had a zero personal income tax policy for years. And that encouraged the most skilled people to go to United Arab Emirates, encourage capital to flow into that economy. And when they have built a base, a huge base upon which to impose tax, they impose those taxes. In imposing taxes, our country must define, how do we grow the economy? Tax is supposed to be a physical tool to stimulate economic growth, economic development, stimulate consumption, and discourage what is not good for the system or for the economy or for the people. And that's why you also have negative tax, which is why you have subsidy, where you use a tax policy to support a sector of the economy to grow. If we don't have a holistic economic development plan, we're going to use tax policies in silos. And as we try to generate benefit for one sector, the implication of losses or costs on other sectors may be actually more severe than the benefit we're trying to gain. I think I'll leave it at that for now.
Now, let's get on to our Q&A session. We'll get comments and questions from our participants. We have the first one from Tunde Pampam. What is the assessable period of this levy? And is this levy on both realized and unrealized FX gains?
The law is retroactive, which is against the tenets of taxation and tenets of law. It's retroactive in the sense that you want to impose tax, because we also call what they call tax avoidance, which is different from tax evasion. Tax evasion is a criminal act, but tax avoidance, you can actually say there's a tax on frisky drinks. I don't drink Coke, I don't drink Fanta, so I'm not going to pay that tax. But it's not when I have drank it, you now impose a tax on me and say, look, that thing you drank last year, I have a choice to say I won't drink it. So if they want to make law, we must make sure that tax laws and every other law are not retroactively applied. So 2023, as a year of assessment, is a retroactive application of the tax law, and that should not be. It should be going forward. I think that's the government must take note of. So in terms of, I think that's the key thing. What is a, and in terms of, does it include unrealized profits? The law eventually excluded unrealized profits. But remember, there's also what we call, when you talk about unrealized profits, there's also go in tax, and I'm sure today you are very familiar with this. You have what we call deferred asset and deferred liabilities. So, and that's asset that could reverse at the other timing difference. So if you now impose a tax of this nature on profit made on movement of a variable that can actually move the opposite direction, then and you take that tax, then it then means that when it reverses, you need to refund that tax. So in that case, if should that happen, what you have is deferred tax liability. So they shouldn't compel that tax body, that agent, that taxable organization to pay that tax, because it could reverse. Which also takes you to the issue that central bank had actually said earlier. Central bank had to forbid the banks from paying dividend from the capital, from the gain made from exchange gain, or what we now call the windfall earnings, principally because the central bank said it will reverse. So if the central bank had imposed an embargo or restriction on banks from paying any dividend, so automatically it don't follow that you cannot impose that tax on the unrealized portion of that gain. And I think that must have informed the decision not to impose it on the unrealized, to exclude the unrealized portion of any exchange gain. Because if you think it could reverse, if the central bank thinks the exchange gain could go back to 1,000 naira to $1 or 800 naira to $1, then if you take that, you will have to, they shouldn't pay it. It will only be what we call deferred tax liability.
Lukayode is asking, what is the role of government on those who have lost massively due to FX losses? Is it equitable to tax those who were in FX profits and leave those who have posted billions in losses from FX revaluations like Nestle, Nigerian Breweries, Dangote Sugar, etc.?
If you look at the balance sheet of the corporate Nigeria as a single consolidated balance sheet, you realize that whatever gain was made by the banks was offset by losses by corporate, by mostly manufacturing companies. So what I would say is that if you look at the banks in the first instance, of course, the government had not stated anything about how to support the manufacturing sector, particularly those who had suffered huge losses from this exchange rate movement. Many of them are trying to come back to the bank, to the capital market to raise additional capital, which is going to be a tough call. I remember when the MD of P&G, Procter & Gamble, was leaving, one of the comments he made is that it's impossible to make consistent dollar profit in Nigeria. And that was why they decided to go. So we may actually be heading a lot of other manufacturing outfits to leave the country if we continue with taxes that are not conscious, or policies that are not conscious of the implications on some of the sectors of the economy. But having said that, I also want to emphasize this. I think it's something that the government needs to also take into account. The banks, the profit the banks have made now will come back full cycle as losses or risk asset default, coming from risk asset default or bad loan write-off. The simple is that if a company you have lent money to has a huge negative shareholder funds and it's not in a position in whatsoever way to pay back the loan they've granted to you, while you have booked capital exchange gain today, you're going to write off those loans in the next 3 years, because you start by first classifying them as substandard, doubtful, substandard, and then you go to a point where you have classified them as lost, and you have to take it by the bullet and write off those loans. So we must also bear in mind that the benefit that accrue to the banks will also still be a cost to them when these loans become bad, because clearly you're going to see a major uptick in the number of million on the banks, because a lot of the beneficiaries of those banks, their debtors are no longer in a position to pay back their loan because of the shift in exchange rate. There are several companies, including the unquoted companies, who have negative shareholder funds because of the sharp movement in exchange rate. And those people may not be able to pay back the loans. We must also bear that in mind. And that's why I said earlier that if the central government, the federal government's primary objective was maintain economic stability, and they said, look, you have gotten this windfall as a result of movement in exchange rate, to make sure that the economy is continuing to operate effectively, what we need to do is to pass that benefit as tax holidays or some level of subsidy or tax credit to those who have suffered huge exchange losses. That way, you will ensure that the manufacturing sector continues to grow. I mean, one of my colleagues here has spoken about the growth in the manufacturing sector of the economy in the second quarter of this year, and the growth as compared to the growth or performance of the financial services sector in the second quarter of this year. And that trend, remember the manufacturing sector is the major employer of labor, is a sector that we also need to increase the value of our export. Because if we grow that sector, a point it becomes a vibrant sector of the economy, maybe we'll be able to stabilize our exchange rate because they'll be able to export to other countries. But what we're witnessing today is that we are driving away the manufacturing sector, and we're going to continue to increase our import. By P&G leaving, you're going to import everything they are producing. Guinness has left. Yes, you can see it was another company bought over them. GSK has left. You're going to import whatever they were producing now. So even when we have achieved some level of domestication in our production activity or manufacturing activity, we're losing it because of inconsistency in our policies that are driving away the risk sector of the economy.
Now, I'll get to you, Mr. Johnson Chukwu, and this question, talks around the markets too. It says, what should be government's disposition to sectors that make excess profits or losses, bracket, from changes in economic conditions going forward? How do we capture unlisted companies that make excess profits from the same condition that triggered the current windfall tax?
What I would say in terms of capturing companies that are not listed is that today, Federal Inland Revenue Service generates the turnover of every company that is taxable. And then when you submit your tax returns, they use your revenue that they generated from the banks to determine whether the revenue you reported in your audited financial statement, it mirrors what they can see from your transactions. And then if they are double counting or contract entries, you will now have to explain that, and they will adjust it to give you their own expected tax liability, or to reconcile your own tax self-assessment report with their own assessment of your tax liability. So there's still a window to assess companies based on their turnover. And then there's also the minimum tax policy that even when you're not making loss profits, you will still have to pay some level of minimum tax. So in effect, if we could not improve our tax system, and then we automate most of our transaction, assessment process, the government or the federal minister will still be able to reasonably levy appropriate tax on companies that have made windfall profits or excessive profits. Ideally, our tax system should be such that we have a defined tax law, and then unless if you are talking of extraordinary facts that you have no contribution to, and that's when you actually talk of windfall tax. Sometimes what we're classifying with windfall tax are not things that we have no control over or are not fortuitous, as one of my colleagues have actually referred to it. Simple reason that anybody who is savvy in financial management would know that you could take dollar position in Naira in Nigeria, knowing fully well that the exchange rate that was doing there was not sustainable and something was going to give in. So it was a logical treasurer's bait that I would take a dollar position instead of holding my assets in Naira, I hold my assets in dollar, given that I know that the exchange rate doing then at 400 something Naira was artificial because the parallel market was doing about 720, 730 Naira. So you expected that the government, the incoming government, and we all knew that we're moving to an election period. A lot of us said, look, the three foreigners in that election are market-oriented people. So you expected some adjustment in exchange rate. So if you take a bet, which could go wrong, assuming that Nigeria has begun to produce 2.5 million barrels or 3 million barrels as a advent of the new government, and then Naira appreciated, then you could have taken a loss. So it wasn't exactly fortuitous. So windfall tax should actually be purely fortuitous nature, not where you take an economic decision that eventually turned out positive for you. That's what I would say. But in terms of being able to levy and charge appropriate tax on even unquoted companies, the Federal Revenue Service already have a reasonable access to the revenue of government businesses, including unquoted businesses. And they also query, because they expect you to give them your GL, your general ledger, which is a comprehensive list of your entire transactions. And they will query things, expenses that they think are not allowable. And eventually, they will end up imposing or levying appropriate tax to even unquoted companies. So we just need to keep expanding the tax dragnet to include companies that they make sure that every company is taxable, and every company records can actually be captured using the BVM, which is what they use currently. My conclusion was that the government must evolve. The current government must evolve their economic development, economic blueprint. That economic blueprint will define how they want to position the economy. Are we going to be a service-oriented economy? Are we going to be a manufacturing-oriented economy? How do we want to position the economy? And then we define those sectors that we want to make as priorities. And then we evolve fiscal framework, fiscal policies that will incentivize investment in those sectors. I think it's biggest logic that we are implementing policies as on spontaneous basis, or what you may call, based on the whims of the immediate situations on the ground. That's not how to develop an economy. An economy must be developed based on a well-defined growth path or growth plan. And that growth plan, every other policy will be a subset of the overall growth plan. And we must also recognize how each economic variable affects other variables. There is actually no silo when it comes to the actions of economic agents to economic policies. Policies will either incentivize investment, consumption, or deter investment and consumption. And we shouldn't look at economic policies from a very narrow premise. We must have a better view of every policy we're evolving and ask ourselves, will this further the overall economic development plan of the country? I think we must have that for us to grow this economy. That's how Singapore grew. That's how Malaysia grew. That is what happened in Vietnam today. That's what happened in China. That's what happened in India. So we can't just run the economy on as a spirit led, which is basically what will happen. We just see any single item and hold on to it, and then we think that singular item will lead to an economic, a prosperous economic environment.